Phillip Shaw joins us now, Senior Advisor and CFP at Goldstone Financial Group. GoldstoneFinancialGroup.com is the website. Phillip, the markets are, well, let's talk about inflation first. For the, what was it now, 12th straight month, it went down again, right?
Yeah, we started seeing some really nice inflation numbers coming through. Just from June, the year-over-year inflation was down to 3% compared to the prior June, which is, it's nice to see that finally coming back in line with where we want it.
I wonder what the most important set of numbers is for us. Is it where the indexes are? Is it inflation? Is it interest rates? What's the number that I should maybe most pin my hopes on?
Well, I guess it depends on what we're talking about. Inflation's the biggest one for the Federal Reserve and what they're planning on doing. Obviously they've had a pretty serious series of increases in the last year and a half here with interest rates. And inflation is going to be the question of, are they going to raise rates again, next time? And if they do, how is that going to impact the markets, and how is that going to impact your portfolio?
Yeah. Well, they are going to raise it next time. I mean, that's a pretty safe bet, isn't it? Up a quarter point?
Yeah, I think we're back in line with where the Fed wants inflation. So the goal is 2% long-term inflation, but that's also an average. We spent a lot of the last decade near to 0%. We've been higher than that recently. We're back down to 3%. As long as we're in that range, I think they're going to call that good enough. But I agree with you. After seeing what we went through in the 1970s, I think the Federal Reserve really wants to nail this one in, and we will see another quarter point increase here coming.
Do you think that'll impact the markets then?
I think the markets largely priced that in. A lot of what we'll see, from a downside of the market, if the Fed comes in and says, we're raising a quarter point, and by the way, expect another one, that might have a bigger impact on the market. But I think this next quarter point's been built in. Bigger
impact on the market in what way? What would happen then?
There's a lot of concern about companies being able to continue financing at cheap rates. And if the Federal Reserve keeps raising rates and cooling the economy, we might see, worse earnings coming out of some of the companies. And I'm not saying a crash, but we might see another downturn in the market from that.
Boy, that'd be a shame, because we've had a nice little run here lately. What's that all about? What's fueling the last few weeks here?
So a lot of this is, what, from my perspective, is, that soft landing scenario that they've been talking about, basically being able to cool the economy down without pushing us into a serious recession, without pushing us into a crash of any sort. And considering how well everybody's held up through the last year and a half of this, a lot of people are starting to look optimistic towards the future. I will say the other thing in there is there's been a lot of optimism about AI, and a lot of the releases we've seen from that in the last year with ChatGPT and all the potential around that is definitely driving some higher valuations of companies.
Yeah, I'd like to see a broader based index, but it just seems to me, and I wonder if a lot of people feel this way. You can do comment, but inflation is the cost of eggs today and tomorrow, but how these markets perform overall, our investment portfolios, our mutual funds, our retirement, our pensions, all of that is how we're going to live not tomorrow, but for the next 35 years. So I would hope that the Fed would realize that inflation is largely being tamed, and let's not do anything to mess with the long-term growth of our retirement funds.
To be honest, that's my exact hope is, we've really gotten back in line with where we want the economy and with where we've wanted inflation. And it's time to stop the process they're going through. But, they're the expert in the field, so they say. My opinion is we are where we wanted to be, and they can stop raising rates, but I'd expect at least one more, quarter point here.
That's Phillip Shaw, Senior Advisor at Goldstone Financial Group, GoldstoneFinancialGroup.com. Phillip, always interesting. Thanks for your thoughts today.
Thanks for having me.